Hi, this is Drew with the Daniels Ag Services with your post-USDA market recap. The only word that can really justify or dictate what this report came out as is bearish. Pretty much bearish across the board, especially for new crop soybeans. So without further ado, let's take a look at the numbers and figure out why we finished down like we did. So first thing we're going to take a look at here is June 1 stocks. Here in the black was the trade estimate, and the blue is what we actually got from today's report. So June 1 stocks, the estimate was 3.723 billion bushels, actually came in at 3.854 billion bushels. So over 100 million bushels what the trade was expecting. So that weighed on old crop corn prices a little bit. As far as beans go, we were expected to have June 1 stocks of 382 million bushels. Actually came in at 405 million bushels. So that's a decent amount higher than what the trade was expecting. That weighed on old crop beans. And then wheat came in slightly higher than what we were expecting. The estimate was slightly lower. The estimate was 597 million bushels. Came in at 590, so missed it by 7 million bushels, which isn't just a huge miss when you're talking about over 590 million bushels. So as far as planted acres comes, corn planted acres came in at 91.641 million acres. That's versus the trade estimate of 91.709. So a little less than what the trade was expecting. And now for the big shocker was the soybean planted acres. Soybean planted acres came in at 84.839 million acres. The average trade estimate was 82.213, and the highest trade estimate, so from the lowest to the highest, the absolute highest guess that analysts had out there for this report was 84 million acres. So blew that out of the water, sent new crop bean prices way low. They actually finished 75 cents lower on the day. So that number was the one that had the trade gasping when they saw it released today, and definitely pushed prices lower. And then as far as wheat planted acres, came in a little higher than what we saw in the March report, came in at 56.474 million acres versus what the trade estimate was actually of 55.777. So finished lower across the board today. July corn was down 25.25 cents. December corn was down 23.75 cents. August beans down 50 cents, and as we noted earlier, November beans really took it on the chin with a huge planted acres number, ended up down 75 cents. Wheat not nearly as bad as the other two. September wheat only down 17.25, and December wheat only down 14.25. So really, if you take a look at the things, beans probably did pull down corn and wheat a little more than they should have been, but I mean, definitely a bearish report across the board. We know what the stocks are now. We know what the USDA is thinking as far as planted acres. So now we just have to look out for weather. Got 5 to 7 weeks here, very critical weather and growing time. So right now, not a whole lot of concerns as far as the weather front goes. But it's going to take something like a weather scare or anything like that, I believe, to get these markets back in step, moving higher, because this report was decidedly bearish. So we'll have to see how it pans out. Again, it really does become kind of all about the weather right now. 5 to 7 weeks left of pivotal growing period, so we'll have to see how it pans out if the weather outlook holds on as good as it's been the first half of the year. So that's all we've got for today. If you have any questions, let us know. Otherwise, we will see you tomorrow morning.
This material is conveyed as a solicitation for entering into a derivatives transaction. This material has been prepared by Daniels Ag Services broker who provides research market commentary and trade recommendations as part of his or her solicitation for accounts and solicitation for trades. Daniels Ag Services, its principals, brokers, and employees may trade in derivatives for their own accounts or for the accounts of others. Due to various factors such as risk tolerance, margin requirements, trading objectives, short-term versus long-term strategies, technical versus fundamental market analysis, and other factors, such trading may result in the initiation or liquidation of positions that are different from or contrary to the opinions and recommendations contained therein. Past performance is not necessarily indicative of future performance. The risk of loss in trading futures contracts or commodity options can be substantial, and therefore investors should understand the risks involved in taking leveraged positions and must assume responsibility for the risks associated with such investments and for their results. You should carefully consider whether such trading is suitable for you in light of your circumstances and financial resources. You should read the risk disclosure accessed at www.danielsagservices.com. Daniels Ag Services is not affiliated with, nor does it endorse any trading system, newsletter, or similar service. Daniels Ag Services does not guarantee or verify any performance claims made by such systems or services.